All right, welcome back to the halftime report. Let us hit our trader blitz. First up is General Motors CEO Mary Barra is meeting with President Trump today. That follows criticism of the automaker's Chinese operations. So, John, I mean, what do you make of it? Is it a reason to avoid General Motors or maybe buy it or not?
No, I would say it's the opposite. It's a reason to buy it, Brian. When you have CEOs sitting down with the president, as we've said about Tim Cook and so forth, I think it's positive. So I would say this should be a positive today with Mary Barra.
Should be. Let's find out how it goes, though. Let's find out how
sir.
it goes.
Let's
Could be a contentious meeting because Mary Barra not exactly happy with Trump's criticisms of GM with the Chevy Cruze in Youngstown, Ohio. All right.
Yes, sir.
According to a new report, nearly a dozen partners at Goldman Sachs may be exiting the firm by the end of the year. It looks like, Joe, they're trying to trim some of the pay ranks at the top.
I think David Solomon's doing a nice job changing the culture and the thinking of what Goldman Sachs used to be. Listen, Goldman Sachs, 222, I believe, was the high in July. It really peaked in March of 2018 at 275. It's been the yield story that's kind of hamstrung this company. But I think overall, if you get some relief, as Kristen was mentioning, in the yield curve, a little bit of steepening, I really like what David is doing here with the culture of the company. This is not the Goldman Sachs that we all knew when we were trading against them 10 to 15 years ago.
Okay. Lyft coming off a record closing low. And today, Deutsche Bank initiating coverage on the stock with a buy rating, Pete, and a $70 price target.
That's really aggressive.
On a $47 stock.
Yep, absolutely aggressive. Uber and Lyft, I think both just reported not too terribly long ago. Lyft's numbers were definitely better, in my opinion. And because they actually have a path to maybe make some money at some point in time, of the two, I would buy that one. But that being said, I think right now it's still a no touch. I think there's downside.
No touch. All right, Twitter hitting a new 52-week high today despite a number of high-profile hacks. Stephen Weiss, you don't care about the hacks. You own the stock.
I don't care about the hacks. I do own the stock. I'm still there. I was actually thinking of buying more. I'll wait till it pulls back. It's in a consolidation phase. You're coming into the political season. That's when their ad growth is really going to rocket. So you want to own it through the election.
Okay, by the way, the CEO, Dick Costolo, former CEO Dick Costolo, will be on next week because Scott and the Halftime Report, I think, are going to San Francisco for a couple of days.